Hi, this is Brian Karimzad, co-founder of Magnify, and we're going to talk about savings accounts. Savings account is actually you lending money to a bank. So you put money in a savings account, you don't touch it often, the bank doesn't let you write checks against it. What the bank does while you hold that money in the account is pay you a little bit of interest. Now, why do they pay you that interest? Well, that's because they take some of that money and they lend it out. They give loans to people. Maybe someone wants to buy a car. Maybe they're going to go buy a house. They're going to pay back that loan to the bank, and they're going to pay the bank interest, usually a lot more interest than you're earning on your savings account. So the bank keeps most of that money, but they give some of it to you because you've let them use some of your money for a certain period of time. Interest rates on savings accounts are very low. They're close to historic lows, but that doesn't mean you should have to settle for the almost zero you're going to get from your local bank branch. Instead, look online. You'll probably find a bank that doesn't have many branches or any branches at all willing to pay you closer to 1% for your savings. That's because they don't have to pay for all the tellers. They don't have to pay for the branches. They just lend money out, earn interest on it, and give that interest to you in your savings account. When you're shopping for a savings account, here are three things to keep in mind. The first is the rate, obviously. Your online accounts are going to give you a better rate than those from your local branch, usually 1% versus close to nothing at your local branch. The second is the minimum deposit requirement. Make sure what you're putting into account is enough, as stated in the fine print, to get the full interest rate they're advertising. Then finally, make sure you actually treat it as a savings account. The government says if you pull money out of your account more than 6 times a month, they're going to consider that a checking account, and the bank may levy a fee against you for doing that. So be careful, put the money in there only if you plan to really save it. Don't treat this as an alternative to your checking account.